I'm Jay Bowman, and I'm excited to share with you some of the key highlights from our fourth quarter forecast for 2024, as well as how would you think about some of the challenges that we see coming over the next year to 5 years. So it's true that we are entering a period of more tempered growth, particularly with some of the economic headwinds that we've seen. Also, this is sort of a unique year. It feels like one of those in terms of a lot of change, kind of going from one cycle to a new cycle when you think of things like a presidential election. So how do all these things impact construction spending in the U.S.? Well, as I said, we're entering that period of tempered growth. Still, construction spending forecast for the next couple of years is around about 2%. So that growth is slower than what we've seen in prior years, but is continuing to expand. The challenge is, how do you find some of those stronger growth markets? Because we do see a mixed bag in terms of what's growing and perhaps what's really in contraction. If we start with residential construction, for example, we're seeing that sort of reversal, as I mentioned, that change in cycles. We're sort of at the end of that building cycle for multifamily, so we expect to see a contraction in that overall for the U.S. Granted, there are pockets where there's still growth, but overall, fairly significant clawback. Likewise, on the single-family side, we saw a drawback of 13% last year. We're actually seeing an increase this year as rates start to stabilize, as demand starts to pick back up again. So again, how do you position strategically to maintain growth over the next couple of years? I know I sound like a broken record sometimes when I say that bull markets and bear markets coexist at all times, but it is absolutely true about our industry. So what about on the non-residential building side? Well, it's probably kind of the same thing in the sense of those stable markets. And that's really sort of the term that I would use to describe non-residential construction going forward. It's sort of stabilizing, but with selective growth. So for example, healthcare construction. Right now it's a little bit flat, maybe 1% for 2025, but really picking up after that, particularly as we see some of these projects coming loose, as we see more investment in private hospitals. Same thing on the educational side. In fact, we're seeing some of that increase more now turning to the higher education side, which has been relatively flat over the last couple of years, as we're seeing more interest in dormitories and instructional type of buildings. And then lastly, manufacturing. Of course, this has been sort of the darling, if you will, of the construction industry over the last couple of years, seeing an almost 100% increase. In fact, about a 20% increase this year, 2024. Now, a lot of that was driven by things like we've seen in the semiconductor space, EV manufacturing, clean energy, and biomanufacturing. Now, we continue to see growth, but now it's going to be at that tempered sort of 5% range. It really doesn't matter because these are at astronomical levels. As I probably shared in my last video, manufacturing represented about 5% of total construction in the U.S. for the last couple of years. And with that increase that we've seen over the last 2 to 3 years, it now represents 10% of all construction spending. And last, let's turn our attention to non-building structures, or what we affectionately call heavy civil construction. Now, this will continue to be the primary driver of growth in construction overall for the next year to 5 years, especially as money continues to flow from things like the IIJA and from the Inflation Reduction Act. And one more thing I just want to touch on briefly is the non-residential construction index. So for the fourth quarter, it's still registering below 50, which means people think the market is in contraction. In fact, it's at 48.4. It's a little bit higher than what it was in the third quarter, but still sort of in that underwater level. So in closing, again, a stable market, but with selective growth in many areas. And so now is the time, particularly for many of you who are, this is your planning season for 2025 and beyond, is where are you going to position strategically in order to maintain that growth going forward? I'm a big believer that you can find growth in any market, in any conditions. It's just a matter of where do you look and how do you position. I really encourage you to download the full report at www.fmicorp.com. Better yet, I strongly urge you to contact one of our investment bankers or one of our consultants and have them help you with sort of tailored advice around your own particular situation and how you can continue to manufacture growth in a stable but selective growth market. Thank you very much.